You dang right it is. Good morning, everybody, or good afternoon, everybody. It is Bobby. It is July the 7th in the year of our Lord 2021, and I am so excited. Uh, Glad to see everybody, Ken and Jim and Rick and Matt and Stacy and Dwayne couldn't make it today, so that's fine. And Smitty, we'll see you maybe tonight. I'll start. Yeah, and the question was, am I still going to post our videos? Yes, I'm going to post our videos. I'm just behind on those, really, really behind. So y'all have a little bit of patience with me. I'm still in that vacation mode. Now, you would have never done what I did this morning. Um, you remember in economics, we talk about the rational man, the rational man, or now you can't say man, because even at Disney World, hello, boys and girls, you can't say that because God knows we might offend somebody. So you got to say, hello, everybody, um, or whatever they say at Disney World now. So you would never, the rational human would not do what I've done today. I have done irrational stuff. Oh, there's Dwayne. Look at Dwayne. Thought Dwayne wasn't going to be able to come in. What's the chat say? I can't hear anything. Is it just me? Oh my gosh. Can y'all hear me?
I can hear you.
Matt can hear you.
You hear me?
Yep,
I hear you just
Dwayne.
down.
Yep, I hear Ken.
And I hear
Dwayne.
Dwayne.
It may just be Rick. Rick, go back out and come back in. Let me mute myself and then I'm going to mute myself. Let's see which microphone am I using. Yep, I'm using the right microphone. Test. I got this big old microphone right here. Can y'all see that? I try to keep it out of the picture though. So maybe Rick will get a little audio here in a second. But the rational man or the rational human would not do what I did this morning. And what I did this morning, and it cost me a few $100 in slippage, right? So, and please don't do this. Don't do this. You and I have constructed a well thought out portfolio. We've done a lot of different things. We've done a lot of different trades. And the rational person would not do what I did today. And what I did today, y'all, was crazy. Let me show you what I did. I've got 45 orders that I've done today. Now, Dwayne, I think you're in with the gold. I took my profits on gold today. So I'm out of my gold position. And what I'm doing in the account is I'm resetting, right? So look at this. I closed just about everything, y'all. I mean, I closed everything but a few trades. Now, the prudent man or the rational man would not do that. So what I've done is I'm trying to do a reset on the account for the second half, right? So we've gone through a 6 months this year with this account. We've done a lot of different things. So now I'm resetting for the second half of the year. And what we're talking about is what we've talked about, what I talked about yesterday, and what I was so excited about. And this is all for science and for teaching purposes. Now, I understand, I think, why a lot of people who teach trading and options, a lot of them use only paper accounts. And they do paper accounts because they go, well, if I want to reset to show something, it's going to cost me money. And it cost me several $100s in slippage to do the trades that I did today and not waiting for them to come to profit and blah, blah, blah. But this is not only to teach y'all, this is to teach me. So I love it when Karen, the super trader, says, yeah, she says, I'm testing some different things and we might allocate some small amount of capital to testing and all that. I believe the best way to test, a lot of people believe in back testing and doing that. And I guess we could do that. I don't want to back test. Don't spend time back testing. I would rather test it in a real environment. And I understand why a lot of people don't do that, because you don't gamble with the babies. I got 5 babies, right? You don't gamble with their lunch money, so to speak. So my baby's lunch money is just fine. Everybody's just fine. So I'm going to actually participate in this study. This is science for me. This is what makes me get up in the morning. I don't get up in the morning and go, man, I'm going to make a ton of money. I get up in the morning and I go, man, I'm going to test some things to further the study of portfolio management. And I just love it. So let me tell you what I've done. I've renamed all of my stuff. So I'll let you see what we've got on now. So now we've got the VIX hedge on. I've got a VSH that's complete. So now I'm calling them complete. We've got our BAME stuff. That is, this has been 3 weeks since I've messed with this BAME, being on vacation in this account. It needs to be updated badly. Um, BSH5, these are 4 complete tranches. Then I've got some BSH where I've just got shorts in it. We've got some micro Black Swan hedges that are complete. Another Black Swan hedge is complete in the E-minis. Here's the macros complete, And I think I've got everything now allocated. Yeah, got everything closed out. And we're looking really good. So I've got all my groups together. And I'm really excited. So let's take a look at the Analyze tab. First of all, let's take a look at the market. Let's look at the market and see what's happening. This shaded area you see here is the opening 15 minutes. Notice it's about in a 8-point range there. Here's the cash open. You see that? And the cash open here at that white line. And it's just in that 15-minute range. It came out of the range. Notice what it did. It bumped against the overnight low. The little purple line, I believe, if I remember correctly, is the overnight low. Then it pumps back up, goes above VWAP. And where does it go? It goes to the blue line. What is the blue line? Blue line is the overnight high. And now it's just resting at that same little area. Now, keep in mind, today is, what is today? It is Wednesday, isn't it? I think today is today the Fed day or something, so that's probably why we're seeing this little tight range, not seeing a lot of anything. And then they'll release the minutes and then all Hades breaks loose. That's when we get the volatility. So it's just kind of treading water right now. We started out, here's high volume. You see the volume working, and now what's volume doing? Volume's just kind of going downward. We see the advancers over the decliners. Things are kind of drifting upward right now. So this just kind of gives you an idea of what the market's doing. The blue line is the hourly mid band. We're above that. So we're just drifting out. Now let's go to Analyze tab. I think you'll like this. So now I've reset the account. Keep in mind, I don't want you to do this. I am taking one for the team. I lost several $100s today in slippage and getting all those things closed. But what we're doing now is we're trying something really, really neat. And what I'm attempting to do now is we're going to experiment with something. What are we experimenting with? Well, we're going to use BAME, Bobby's Automatic Investment Management, right? Or you can use AIM on what Lucello did. How to make $1 million in the stock market automatically. So I'm believing that BAME is working really, really good. And I like the way it's working, even though I need to seriously update it in this account. Plus, we're going to do the Black Swan hedge. Plus, I still believe in the VIX hedge. Not that I don't believe in a lot of other stuff. It's just that I want to experiment with this. So BAME plus Black Swan hedge plus VIX hedge plus something that's going to help us for a slow grind down market. The space trip trade, I think, fits that bill. Equals, and I'm just saying gold, right? I'm thinking this is a very, very, very profitable strategy that will work. So we'll try BAME plus Black Swan hedge plus VIX hedge plus maybe space trip trade, and we'll say this equals gold. Rick, can you hear now? I saw Rick for a second.
Yes, sir. That was it was my bad. Thank you so much.
Okay, glad that you can follow along now. So this is what I did. Again, I don't want you doing this. I don't want you doing this, but we're learning. Now, Smitty said he's been doing the Rick trade. Rick trade's doing great, right? We're in a bull market. Rick trade is killing it. Rick is killing it. I mean, Rick's probably up 50% on the year or more now. He's doing great. He's doing the Rick trade. Awesome. So we're just teaching other different things to do. We're talking portfolio management, different ways to manage portfolios. And what this does for me in a personal account, like the account that we trade in here, this helps me in my other accounts that I have, right? We've got the hedge fund that I manage, does different trades, and sometimes I'll implement some ideas that we'll try out in the personal account. So this is science for me, helps me to learn as well, and hopefully helps you guys to learn, bits and pieces of different things that you want to try. But I just want to try this for the next 6 months and see where we go with it. It could be a flop. This thing may just flop. We may lose, $10,000 or more. Who knows? But we're going to give it the good old college try. So let's go to the Analyze tab, and I want to show y'all this. I thought this is pretty cool. So this is ES, all right, and this is, let's see what we're showing you. We're saying, let me just do single symbol so that you can see my ES trades. There we go. So this is ES trades only. Yep, hiding simulations. So this is ES trades on. So this basically is nothing more than the Black Swan hedge. Plus, I've got 3 naked, I call them naked. They've not been matched with 5, right? So this is a 12 and 20, a 3 and 5 on the Black Swan hedge, and a short 3 that have not been paired with a 5. Now I've got an order in to fill those 5, working order, where I'm trying to get those filled for $1.50, and right now they're $1.80. So what this particular strategy is going to allow me to do is this. I don't have to, on this particular strategy that we're trying, Black Swan hedge plus space strip trade plus BAME plus VIX hedge, I don't have to make individual daily trades. Remember how we were doing that individual daily trades? So all of a sudden, Bobby gets to the point, he goes, hey, wait a minute. What if I want to slow down a little bit this summer? And we want to go to Dryden's Mill and take the kids so they can go play in the river like I used to when I was a kid. And I don't have to watch stuff all the time. So I can manage my account now by putting in GTC orders, checking once or twice a day, kind of the laissez-faire of portfolio management. So let's see how this works, right? So let's go to the Analyze tab and see what happens. So I've got the vol steps. I've got 4 vol steps here, and I bumped that up to 15. And an approximation, this is only an approximation of what I would think that the VIX is going to be at, right? And someone looking at this and says, well, Bobby, that's not really VIX. That's the vol step of ES. I got it. But I'm using it as an approximation of VIX. What happens if the market goes down 20%? We get a big old 20% drop. Then I'm up $5,416 on these ES positions, which is pretty sweet. But this doesn't include the effect of volatility. So what happens if volatility, we go down to this 34.7850? So that little dotted line, hopefully y'all can see, is down 20%, right? And then I want you to follow along over here and just look at some of these numbers, okay? If volatility goes to different areas. So the market goes down, 20%, and the volatility goes up to 60 or 75, then on my ES positions, I'm up $47,000. I'm up $68,000 if it goes up to 74%, right? So that's sweet. So that covers our crash, right? That covers our crash. Now, what about if we were to go in here and say, hey, wait a minute, Bob, but you've got other positions. You got the VIX and you got all that BAME garbage that you're so, proud of, that's doing so well. So what happens with all that garbage? What if we throw everything in there? Well, let's see if the Analyze tab will take into account that. So here we're up 68 grand. Right? So let's go and change this from single symbol to portfolio beta weighted. And let's see what happens. Well, it changed a bit, didn't it? Now, who knows? I mean, it's just an approximation. This thing is taking into account, all kinds of stuff. So now I'm only up 59,000 if everything were good. But who knows how all of those BAME positions would happen. But I think it's safe to say, whether it's 59,000 on the drop or whether it's just on my ES positions, whether it's 68,000, right? I mean, that's a pretty darn good hedge. Now, what am I doing? What am I doing, y'all? I'm basically saying that this market is overbought. We are due a correction, but I have no idea when it's going to come. But I do know one thing. The day will come when you got to pay. What do they say? You got to pay the fiddler or whatever. You got to pay the violin. We got to pay the band, y'all. You just can't do this forever. I mean, the market just cannot continue. Well, it's continued since 2000, what, 9, 10. But at some point, you think, man, we're going to have a really um, significant correction. Now, if it doesn't happen, what do I want to happen? Well, I want my little BAME stuff to keep on going, baby. You know, keep on going. Now it's down a little bit today. Let's see how BAME's doing. And I feel so bad I hadn't got this updated in so long. So on the open, I'm up $1,100. It's down $139 on my BAME stuff. And I definitely, direly need to get this updated. I've not updated it in a couple weeks, and I like doing that weekly. So I'm ready, baby. I am ready. Crash, baby, crash. And, you know, I don't care what happens. Now, in the meantime, we want BAME to pull the work and to give us our positive deltas and to do what it does. Now, what's this? This is what's hurting me, though. Now, when I go over here and I ungroup everything, this is going to go against everything that I've ever done. Again, we're experimenting. We're experimenting, y'all. I got huge positive deltas. I got negative theta. Oh, Lord. And I've got positive vega. So this is out of line from anything I typically do. This is out of line for anything I typically do. This is fine. This is what I typically do. Right? So we've got negative 46 theta. So that would go, oh man, that's kind of bad. Yeah, but my thought process is the deltas on my BAME stuff being positive in a bull market, it's going to overcome anything that's going to hurt me with this negative theta. Now, you say, Bobby, I don't have the Black Swan hedge in the ES. Okay, well, are you doing it in the micros? We've been working on the micros as well, right? So let's see what this looks like on the macros. Macros, let's see, single symbol. Yep, just make sure we're looking at apples and apples. So here you go. Wow, look, if the market goes down 20%, we're going to be up $208 on our micro Black Swan hedges. Yay! Okay, but what if the market goes down 20% to that 3477? Let's see if we can pull it over here. See if we can pull it. There we go. So here we are down at 3477, a 20% drop. And what are we up on our micros? Well, we're up $2,712. That's pretty sweet, isn't it? That's still pretty sweet. I like it. I like it a lot. So we've got that going, and this looks good. So what is that comprised of? Do I have any nakeds in here? Let's see what I got. Hide simulations. Let's see what we got. What do we got, Bob? You got nothing there. All right, so you've got a 3 and a 5. So that's one Black Swan hedge. You got a 3 and a 5. That's another Black Swan hedge. And you got a 3 and a 5. So you got 3 complete tranches of Black Swan hedge, right? So 3 complete tranches of Black Swan hedge gives me, so, you know, if you were sitting there and let's look at what that's taking up. We go to our macros. I got 3 complete tranches of the Black Swan hedge. Just 3. Just 3. And what buying power effect is taking $48 of buying power. I'm up $12.25 on the entire trade. And so you've got an account that's got $1,000 to $2,000 to $3,000. And you go, man, hey, I'm putting these things on for an overall credit. And if this market crashes, I'm good, baby. I'm at $2,700. So you got a $3,000 account. Market falls 20%, you just doubled your account. I mean, that's pretty sweet. So you may even say, Bobby, I don't want to do space strip trade. Hell, I don't want to do BAME. I don't do anything. I don't do the VIX hedge. That's fine. Look at this, y'all. I mean, this is good. All right, so let's look at the VIX. Let's see what we got going on VIX here. VIX. I always like looking at VIX. And I don't want to look at vol step on VIX. Let's just look at single on the VIX. All right, so here's VIX hide simulation. So we've got, here we go. We've got various calls in our VIX hedge. How does that look like? Well, remember, VIX went up to what was it? Was it 80 during March? Something like that. So if VIX goes up to 80, again, like we had in March, you're up $15,673. Sweet. Well, what if it only goes up to 70? Well, you're up $11,000. What if it only goes up to 60? You're up $7,800. Heck, what if it just goes up to 50? You're up 5,000 grand. 5,000 grand. You're up 5,000 bucks. See? So we're kind of, we've got this hedge in as well. Now, we're paying a debit to do this, right? God, will someone let that dog in? Hope somebody heard me. So, we're paying out a maximum of 3% of our account on a year to have on this hedge. But do you need this? Do you have to have it? No, you don't have to have it. But I like it when it goes to me having a complete hedge on, let's see, ES. Let's go to hide simulations and let's go to portfolio beta weighted. So we see our entire portfolio. And you see, I've got a bullish portfolio, don't I? Got a bullish portfolio with all that BAME stuff. But when we put in the volatility coming down, let's see what this looks like. Vol step 4, there we go. And that's where we make the profits when the market goes down. Well, if the market goes up, well, we're good too, aren't we? We're good too because we've got all that bullish delta that takes us up there. So the missing part of our strategy, I think, is what happens if the market goes down 5 points a day, 10 points, 20 points, and then you don't get that spike in volatility. So that's why we covered last night the space trip trade, which is kind of a cool trade, right? That allows us to put on something that helps during a grind down market. So let's kind of look at that. Now, I saw y'all were chatting in the Discord. What were y'all talking about? Y'all said maybe I covered it today. What was that? What y'all want me to do? But what was it y'all were talking about in the chat? Can someone tell me what it was that y'all wanted me to cover? I think it was something with the space trip trade. Okay. I don't hear anything. So let's go to the Analyze tab and let's put in Add Simulated Trade. See if we can do something here. Okay. So let's do ES. See if we can figure out something how he was doing the ES trades. Hey, will somebody let the dog in? Oh, I'm sorry, the dog is in. Sadie, come here. Come here, Sadie. Why you gotta go? Come here. Stupid dog. She's trying to get my guinea foul. Hey, Sadie, calm down a little bit. So what he was talking about yesterday is go out, yes, it's being recorded. Sorry about that. So my grass man is outside, and I'm afraid he may be hitting some lines or something. I don't know what's going on. All right, so let's see if we can do something here. So now I need 120 days. We got this one here. I mean, we could go anywhere in here. And again, a lot of times I'll defer to going out even farther, but let's go out the 100 days here. And let's see what we can figure out. Let's try.
I'm not seeing your screen. I'm just seeing all the participants.
Gotcha. Let me share it again. When it kicked me out, when my internet kicked me out. There we are. Everybody see it now? So I think I had all strikes listed on that. Yep. So now let's see if we can put in a little something here. So he was going down to about the 10 delta. Where is all my stuff at? Hold on a second. I need my deltas and all that kind of stuff. Last net change. I don't care about that garbage. Hold on a second to see if I can get it here. Option theoreticals and Greeks. And let's go delta. He was actually using delta. All right, so he was going down to about a 10 delta. Let's find that. So anywhere in here, right? And generally, he was going and using the. Now, here's the thing too. He's looking for a 50 wide, right? 50 wide. So that would be maybe 3650, and then go to the 3600. 50 wide. Let's try that. 3650 and 3600. That's a 10 delta there. Let's try that. 3650. So we'd sell 3650 and we would buy the 3600s. Help if I would hide positions so we can see. There we go. Custom. Let me do away with that. Let me do away with that. I got a bunch of them, don't I? Hide position. That's not one. Traded calls. Hold on a second, child. Let me delete all this garbage. Well, we've been doing some. We'll do them all. Now, that takes out everything, doesn't it? All right, now let's do it. So we're going to sell the 3650. There it is. And buy the 3600. Okay. So let's look at that. Remember, he was going for about what, $3. So maybe we need to move that up to the 3700 and move it down to the 3650. Let's try that. 3700, 3650. See what that looks like. 3650. Come on, Bob, get it together, bud. 3 1/4. Yeah, I like that one better. So there it is, and then we would do that 10 times, right? So 3, 4, 5, 6, 7, 8, 9, 10. Yep, there it is, 325. Now, here was the interesting part, right? Is where, and I think this is what you guys were asking about in the thing about how he did the straddle. So what you would do is go at the money. So this is trading at about 43.50. 43, 46.50. See if we can do it here. 43, 46. So he's kind of going right here at the money, right? You see at the money. And I think he did a right click and analyze a buy trade and analyze a straddle. And the straddle hopefully shows up in the bottom. I said, hopefully it shows up in the bottom. There it is. If you were buying the straddle at the 43.40 there, right, and it's at 43.47, would be a $268 debit. All right. So what you do is you take the price of ES, 43.48. Let's do that. 43.48. Current price of ES, and you subtract 268 minus 268. That is 40,080. So basically, we would go for strikes of 4,000. We won't go below this, right? So we would go 4,075 and below. So that's a nice, easy, even number. Let's see if we have that, though. Because, again, a lot of times these strikes are different, right? And so where he was doing I remember this now, where he was having to do a 25-point wide, we don't have that luxury, right? We don't have the luxury of those 25-point strikes in this expiration of ES like you did in SPX. So what would you do? Well, you could do a 20-point wide. You could do a 30-point wide. I would probably do, I'm trying to think how I've done it in the past. I would probably do the 20-point wide. Let's see, 4,080 So let's say if we go 4,080 and above. So what you're doing now is you're going to do, hold on a second, let me take this out. Take that out. Yep. So 4,070, 60, 50, there'd be 20 wide. That's probably what I do. I would buy the 4070 and I would sell the 4050s. All right, now let's look at this. All right, now then, let's see if I can close this up since we've kind of identified our strikes. All right, don't want to lose anybody yet. And let's now do our price slices to see what our option chain, let me do that. Minimize that. Let me minimize, would maximize that. I'm trying to get me some more room so we can see what we're doing. All right, so that's got positive deltas of 5/16. So what did he do? He increased the contracts, right? Surely there's a way I can see all of that at the same time. I'm trying to figure out how. So if we increase the numbers of these, 2, 3, 4, 5, 6, let's see what 7 looks like. So that's a $6 credit. Probably get that a little bit more. 650 credit, 975 credit. That doesn't make sense because we're doing more of those. Hey, there we go. Now we're moving in the right direction. So let's look at that. Let's see what the price slice says that about the deltas of that. Right. So that one's about delta neutral, right? It's got positive theta for the overall trade. It's got negative vega. So let's go and pop up another one on that. Let's do 9. So that would be, I said that would be, I think that would be, I think that would change. Aha, that does a 0. So it's probably about right there, right? Let's see what 9 gives us as far as our opening deltas on that. Gives us a little bit of positive deltas. Now I wonder what would happen if we stretch that from 20 wide to 30 wide. So 40, 70, 40, 50. Let's see, buying the 40, 70, doing the 40, 60, making that. Hold on, Bob. I can't see my numbers. 40, 70, 40, 50. So let's make that 40, 40. Right? I'm going to pay a $10.50 debit. Hold on a second. Let's see what she looks like here. $3 debit. Now we're going. Now we're cooking. Now that's a credit. If you add 7, that's a little bit of a debit. So let's see the price slices on that. Sadie, shut up. There we go. I like the feeling of that one just a little bit better, right? So that gives us a delta of negative 49. Gives us a little positive theta. Does have negative vega. It says buying power effect is 7,975. So if that's the case, and I'd like to see what it actually is when I send the order. So does everybody kind of see what this is? And that would be a 10.7. Let's see what the total thing would be. Confirm and send. Now it says buying power effect 0. Remember when he was talking about last night that that this trade, in conjunction with the, I mean, it may say that it's taking $7,000 of buying power, but when you put them on in conjunction with your Black Swan hedges, it could be much less. And I think that's the what we're actually seeing here. So on this particular trade, this would be $136 debit to put on a trade that gives us a little bit of negative deltas, right? And let's see if we can actually look at the risk profile of this particular trade. So make sure I got nothing else on but that. All right, let's go to risk profile. Here we go. And let's go to expiration 1. We're going to go to not portfolio beta weighted, but we're going to go single symbol. There we go. And Yeah, beautiful. Here we go. Come on, little monster. Come on, little boy. Let's see if I can make that bigger so we can get a bigger picture of what this thing looks like. Come on. Fill in. Fill in. Think or swim. We know you're there. There we are. There we are. So, looks like the expiration on that was 9/1. Remember, he's saying put this thing down about 1 standard deviation, which is what that is, right? And then what you're hoping with this trade is that over time, that this trade builds up a little profit hump. So if you see the little purple line, right, that's today's line. So as time passes, you're going to see this little thing bump up if price and all things stay the same. So let's try to move that up a little bit. And let's go here. So here's today, right? So watch this thing as well. Let's see if we can do the whole deal where y'all can see this and see the Greeks of the trade. Come on, little fella. Come on, little girl. Up on up there. There you go. Now, everybody sees that pretty good, right? So let's just move this on and see what happens with our little line here as time heads on. And you should see, as I do that, you should see the little purple line start to get a little hump. Kind of like your mama. You know, one day she starts hunkering over, and the next thing you know, she's really hunkered over. So over time, as time passes, this is a really, really slow trade, right? But as time goes on now, you'll notice that, you know, the P&L on the open of $580, the theta is still positive on the trade. The delta has got a little bit increasingly negative, which means that if price now starts, if price of ES, the E-mini start to come down, what happens? Then you're coming into a little profit hump here. So let's move it around a little bit more. See the profit hump just go up and up and up. And then what I was doing when I was trading these on a regular basis is I was putting another one on, right? So you run this little puppy on, and the next thing you know, you keep running these and you have several of these on. So as price is moving in the E-minis up and down, you start having these little puppies layered out here, right? That give you some downside protection. I think Ron was talking about this particular trade gives us protection if the market grinds down, you know, between that 5 and 10%, so that you're, you know, ultimately having this this little profit hump. Price coming down into here is a beautiful, beautiful little thing. So as time has passed, you'll see that, you know, that the profit on it now is at $670. Let's just kind of move it out and keep on going, see what happens. $700. There you go. You just see it kind of keeps on. Now it's got negative theta to it, right? Now profit is going down at the money. But notice is what happens to that profit hump. You're still seeing the profit hump, right? You're seeing this little profit hump go up, and up, which gives us that nice, sweet downside protection. So even though you're starting to be down on money here, this is it's a hedge, but it's not a hedge against a crash. It's a hedge against price slowly moving down. And what I was actually doing when I was doing these on a regular basis is I was putting these on, I think, for a $5 credit. So I was getting like a credit of $250 putting these on. And as you and I have more time together to talk about the space trip trade, you're going to see that there's different ways to put them on, like if you're bullish or if you're bearish, if you're whatever. But we're just talking about the basic setup now. And the basic setup is doing this where the deltas at today are basically neutral to a little negative, just like that. Now, let me talk to you about a couple of drawdowns to this particular trade. A couple of things I didn't like. Again, Ron and his group no longer trade this as a condor. They trade it as a broken wing butterfly. I like the Condor because that's what I was used to. They didn't do the broken wing. They do the broken wing butterfly because it only has 3 legs and there's a little less commission involved because of that, right? You're not trading as many contracts. The one thing that I did find is oftentimes, even though I was in profits on this and I wanted to take my profits or take it off, you have to let it work a while. I mean, or you have to move your price because you've got legs here, 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 and here, then this thing kind of, you got to work it. So, I mean, when you start saying, hey, I'm going to close this for a couple $100 profit or whatever, put on another one, or you may be putting on one of these once a week, you put it on once a month, you start just layering these things over and you have to work the price a little bit. But that's basically the trade. Now, let's see if we can look at positions and simulated trades. Let's see. Positions. Let's see if we can show everything. See what that looks like. Hide positions and show all. So let's see what everything looks like. There we go. Everything looks like we got single symbol. And now let's do what happens on our little fall step crash and see what things look like. Ought to be interesting, right? All right, so I forget where we were on the other one, but here we are at a 20% crash, and you're still doing good, aren't you? You're at $61,000 on a 20% crash down with the vol step going up to about 74. It's beautiful. Let's see what the whole thing looks like. Let's see what the expirations look like all together. There it is. That's everything together, right? So you see this, we're able to see that, and we're also able to see the black swan hedges. Everybody's fearful of that valley of death. We know that gets lifted up if we have extreme volatility that goes up. However, this one is made to profit just in the event of a slow grind down market that comes into our little profit team. But it's
Hey,
cool.
Bobby,
Yeah.
wasn't he talking about sometime, if memory serves me correctly, about harvesting the put credit spread like after 60 or 90 days or something?
Yep. He was talking about. Yep. He was talking about doing that. Taking that off at some point, and you certainly can do that. And what happens if you do that, Rick? Then this makes this disappear, right? And so now your little profit thing, let's see if I can draw it, would look like this. So basically you'd be Xing this out, right? You'd be Xing this out. So then what would your little profit thing look like? It'd look like this, wouldn't it? And that's supposed to be a straight line. Hold on a minute. It would look like this. All right, which will give you even greater protection to the downside. Yeah, so certainly you could do that. Certainly could do that. And the thing that I liked about the trade is I was putting them on for credits, right? So I wanted this upper expiration line. Let's see if I can delete all that and show you. Let's see. Let's hide positions. And just show simulation, hide positions. There. So there's our little deal here, right? So the upper expiration line here, is slightly negative, but I was putting this thing on to where, I had an upper expiration line that was positive, so that if the trade, if the market continued going up, then I was still making money. Now, the reason I don't think we have to do that now is what happens now if the market's going up. What's making us money here?
BAME.
Yeah, BAME is killing it, right? BAME is just killing it. So the reason that we're considering putting on one of these is slightly bearish is we want to have some type of protection in the event that the market starts going down against us. Now, if we were to send this order, like this. Let's just look at it for a second. Now it's doing it for a credit. Isn't that interesting? But I bet if we were to send this order, we're not even going to get filled. Let's see. Confirm and send. Da, 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 da. Now it's saying it's giving us a cost of 97 plus. See the commissions on there, 42.50, 19. I mean, you're spending what, 60 something bucks in commissions on that. So yeah, that could get big. Now, the one thing that you and I have not tried, and maybe we'll do this tomorrow, is we'll look and see if we can do this in the micros as well. I think that would be interesting, especially if you guys wanted to play with it and say, hey man, I'd like to, you know, to just try it out and let's see if we can do it in the micros. And I think that's what we'll do in our session tomorrow, is that we'll see, you know, do the micros hold any potential for us doing this trade? And I think it would. You know, we may have to adjust some things or do some things, but I think we can really figure something out to where we could do that. I wonder if I send this trade, what would happen? Let's see. I got a feeling we're not going to get filled, and you would have to work it some. And again, that's another, you know, drawback of that. Now, I was doing these as butterflies. I've done them as butterflies in the past. I'm going to have to look over my notes. I was trying to look last night and say, how was I doing the butterflies? Because what I was doing in the butterflies was a 4-8-4. Let's see if I can draw. It was a 4-8-4 where it was a broken wing butterfly. So I was buying 4 up here, right? Then I was selling 8 in the middle. And then I was buying 4 down here as a broken wing butterfly to put on a very similar trade. So instead of it looking like the condor, right? It looked like this. Like a broken wing butterfly. Gosh, my drawing is horrendous. But it looked like a broken wing butterfly. Like that. Okay. So cool stuff. Any questions at all? I mean, were y'all excited about the space trip trade last night when we were watching, or what's your thoughts about it?
I mean, that sounds really good to me.
Yeah.
I mean, you got that downside protection before a crash. Let me put it that way.
Mm-hmm.
So yeah, I'm excited about it.
Yeah, I think it's a really neat trade, and like I say, you know, I love experimenting. So I think experimenting with Bain, Black Swan Hedge, VIX Hedge, and the space trip trade is going to be kind of interesting. So I would like to do that for 6 months and just see how it works out. Maybe a complete disaster, but on paper or on the side of the pool in Myrtle Beach, you know, while I'm sipping apple juice on the side of the pool, I was like, man, this sounds like it might just work. So we'll see. All right, guys. So if everybody has not accepted the invitation to the Trader Nerds room, go ahead and accept that. So I'm working now. I got to figure out how to close down our existing room. So I'll be bumping y'all out of our current room and moving everybody over to the new room. So, because I don't want you to get charged anymore, right? So I don't want $50 popping out of your account or something. So hopefully look and see. I don't know even when your next, you know, thing is, but we need to get you out before your next $50 goes through so we can get everybody canceled and into the new room. So I'm really excited about moving over into that new room.
Are you going to transfer the resources like the
Yep.
file?
Yep.
Oh, excellent.
Yeah, I'll transfer all the resources over. I mean, it's basically going to be the same thing. It's just we changing I guess I could have changed the name of our existing room. That might have been easier. But then y'all are all brought into there from that lunch pass that charged you $50 and all that. So I just thought it was easier just to start a new room so we can all be in the same place. We'll still do our Zooms every day. We'll still do the recording. So nothing really has changed other than the fee structure has changed, right? So there's no fee to you anymore, which I think is
thank
really
you.
awesome. Good.
Thanks
All
a
right.
lot.
Absolutely. All right, guys, y'all have a good rest of your day, and I'll see if I can work this order, and I'll let you know if I get it in, and I'll see y'all tomorrow.